morning, ladies and gentlemen. Again, a very warm welcome to all of you on Business Today Television. We are at the start of a fresh week, as also the end of the monthly expiry of futures and options on Tuesday, which is tomorrow. November has been particularly kind to Nifty. The index is up about 2.5% so far in the month, and of course has again reclaimed its previous high. The latest high today, day before yesterday, was 26,240. What is the way forward? Where are we headed? And what are the outperformers, potholes, as also the way forward in the markets? To discuss this and a lot more, we are now joined by Mr. Deven Choksi, Managing Director at DR Choksi FinServ Private Limited. Deven Bhai is a market veteran, a very well-known face, and has over the last 4 decades honed his mastery over the Lal Street. Deven Bhai, namaskar. As always, it's a pleasure to host you. How are you reading sentiment on the Lal Street these days?
It's good morning, Shaib. I think the overall market mood is quite upbeat and buoyant, looking little promising than before. The second quarter earnings season has been extremely kind. On one side, though the volume growth has remained, I think, selectively higher in some of the consumer areas, but the margins, by and large, I think, have remained higher in most of the cases, including in the commodity segment. And that is promising a few things. If the cost structure is lower, margin is better, and along with that, from the third quarter onwards, when the consumption level starts increasing, generally the second half of the financial year, one is expected to see higher amount of spending by the consumer. Also because of the fact that you have got the direct tax savings of up to 10 lakh rupees per individual, and also reduction in the GST, which has actually started increasing the consumption in various items. Expected to see the combined effect of both in the second half of the financial year. And that's where volume-led growth, along with improvement in the margin which we has experienced in the first half, is likely to contribute. So the second half is expected to do much better than what the first half has done in this financial year, and likely to see the growth rate continuing in 26-27 financial year. That's what our take is. So the market will not lag behind. I think given the kind of earning growth that we are experiencing or likely to experience, I believe that the market is soon going to catch up. And I wouldn't be surprised if I think we are talking about 30,000 Nifty could happen in the first half of the calendar year 26 itself. So let's wait and see, but things are looking quite promising from current levels.
Okay. I think that's an interesting thought process to take this discussion forward, that things will improve from now on. Deven Bhai, there is one part of the market, I'll request meanwhile the PCR to kindly show us the chart of the rupee at a record low. Deven Bhai, there is one part of the market which feels that this record low of the rupee versus the dollar and this impending trade deal with the US might finally attract our foreign friends into the Lal Street. So far, we've navigated a lot of volatility with very strong domestic flows. How do you stand, where do you stand as far as this combo of a fresh low on the rupee and the possible re-entry of FIs is concerned?
Yes, I think it is slightly perplexing because I think the dollar index is low, and the value of dollar probably has not been great, frankly. Vis-a-vis that, I think rupee is not supposed to have depreciated the way it has depreciated, so it is slightly perplexing. But largely the fact remains that I think the market is driven by the sentiment at this point of time. And because, as you rightly pointed out, the FTA is not signed with America, as a result of which tariff-related issues have actually impacted the amount of activity in the country today. In my viewpoint, I think it's a matter of time. America has been putting the pressure on for signing the FTAs with most of the countries, and so is the situation with India, I believe. I believe that I think this particular agreement, once it is completed, probably I think that will be out of way, and if I am right in that particular analysis, we might see a significant amount of rupee appreciation from a panic level of what it is currently, I think, to somewhere around 87 or so. So that's a viewpoint that I'm having. Currently, I think with the kind of interest rate reduction possible in India, and currently with the earning growth prospects going higher, also due to American market expected to correct, I think some amount of money is coming out of the American market would possibly find its way into some other emerging markets like India. In my viewpoint, I think the case for rupee becoming 87 is, I think, probably right at this point of time. Maybe before that, it has to make a panic bottom, and that's where probably I think one is counting on. Should it make panic bottom around 19 or so? I guess I think from there the recovery should happen. So frankly, I believe that I think things are looking relatively more stable than otherwise. And with this FTS signed up, 26-27 financial year remains extremely promising from the export point of view. In fact, I think India is ready with whatever the demands that we is getting out of the global market. Some platforms like ONDC, platforms like I think central bank digital currency, there are some of them I think which are going to only add to this particular growth mechanism, which I think the country is likely to experience. So we remain cautiously optimistic and count every single move, I think, on this front in a very systematic manner.
Okay, fair point. That's also a sensible thought that is running within the market. Deven bhai, you've always been a value buyer, and at this point of time, at a record high, value is in two spaces, perhaps. One is IT, and the other is PSU banks. For these two structures, what is the research team at
DR Choksi, yeah.
your outfit now thinking?
Well, I think the our approach is very simple. Public sector banks, which you alluded, I think is to get into a stronger mode. The government and the finance ministry and the RBI is now working in a direction wherein the version 1 of consolidation which got over in the last tranche, I think by around 2019 or so, or even before that, I believe that I think the version 2 of consolidation is getting started because government is seriously interested in bringing the size of the banking sector to a larger one so that I think they can possibly participate in the growth and development program of the country. So public sector banks are largely driven by the thesis that the consolidation could drive the growth. But mind well, I think the consolidation, though it sounds exciting, in my viewpoint, I think it takes time to absorb, I think, any entity, I think, into the mother entity which gets into the buying mode under the consolidation. So suppose if SBI, I think, picked up some of their subsidiaries, I think they could seamlessly integrate them into the portfolios. The other PSBs, I think, who integrated with the other public sector smaller banks, I think they had their own time challenges, and as a result of which, I think they haven't been able to produce a better performance on the stock market front from the from the price point of view. Though I think their balance sheets have got repaired significantly because of the government infusing capital, etc. Now today the situation is that I think having infused capital and stabilized public sector banks, the next level of consolidation could possibly mean that I think the system integrations with each other and possibly drive the growth thereafter. Not too sure how long it takes, etc. But we are mindful about I think all the possibilities, and that's where I think the public sector banks are looking relatively more appealing at this point of time. Though I think I would say it will take time for them to produce or reflect upon the profit based on whatever the thesis coming out on the consolidation front.
Okay. Deven bhai, two very quick questions. Apart from SBI, your top pick in the PSU banking sector, and within IT, if you remove mid caps, what is the top pick at your research team?
Well, I think the valuation wise, we are comfortable with likes of Infosys and TCS. Both of them are in a corrective format. In fact, I love the way in which TCS has now strike the deal for creating the data center. Maybe I think I haven't seen last so many years that I think these people have actually I think gone ahead and I think started creating the asset-based business model. Up till now, they have always been asset-like business model. And today, I think this asset-based business model, which is coming up through data center, it's a permanent growth structure as I see it. In fact, I think the amount of new data center capacities which are coming up in the global market in next 5 years of close to 1250 GB gigawatts rather, I think that is something which is inspiring me, that anybody who is making a move, likes of TCS, likes of Infosys, even Reliance, Adani, Connects, etc., those kind of companies are likely to see relatively better performance going forward in the sure performance, because I think this is where probably the larger amount of data computing would take place. So yes, we remain distinctly positive about the prospects going forward for IT companies, large IT companies. Should they engage in faster change in the business model, I think that would be, I think, a surplus. Downside risk appears limited at this point of time, I must say. And that's where I believe that I think, yes, one could concentrate on some of these things.
Okay. Deven bhai, more or less we are agreed that we are headed for a record high. Now, post the third quarter earnings, there are of course green shoots across the board. Your favorite space, the blue chips, is doing extremely well. Look at M&M, the top gainer in the Nifty over the last 5 years. It's the top performer. L&T at a fresh high. Bharti is doing amazing work at the top of 2100. SBI, there is no stopping it. So it's a very nice large cap rally. Now, what are the green shoots that you have observed in the third quarter? Any mid cap or small cap stocks you think should deserve mention?
Mid cap and small cap, I will have to wait, I believe, because I think most of these companies have had their fortune in past 2 years, wherein they probably came to India markets, listed higher valuations, and I think discounted earning by at least 3 years in advance. So 26-27 year is going to be a year of rationalization for mid caps and small caps. In my viewpoint, I think as early as second half of the financial year 26-27, one would see some amount of, I think, participation of mid cap, small caps into the portfolios. Till that point of time, my reading says that I think for large caps, I think which have remained laggards in last 1 year or so, could possibly find higher inclusion in the portfolios at least in the next 6-7 months. So I think we are mindful about the situation that mid caps, small caps have got good opportunities, at least some of them for sure. However, because of the valuation needs to rationalize, I believe that I think one will have to look at from the timing perspective, definitely second half of the financial year. Maybe as we progress every single quarter and see the activity in the market, we might possibly advance this timing to enter into these stocks, I think by a quarter or so. That's quite possible. But as of now, this is a view that we carry.
Okay. In terms of sectors, how do you rate defense? We've seen a massive correction. An unfortunate instance in Dubai air show has resulted in a pretty sharp sell-off on Hindustan Aeronautics. Within the research team, which is the top pick as far as the defense sector is concerned?
So honestly, I think we don't have any particular company to bank on at this point of time. We have been holding Solar Industries, I think, as which can also be called as a disclaimer for the timing for the disclosure that I'm making. We like that company largely because I think we see the higher amount of visibility in the growth from that company. Rest of the companies are promising growth, but I think their growth rate is comparatively slower. One. Second thing, their valuations are probably, I think, ran ahead, and 3 years in advance they are discounting at this point of time in the market on their earnings. So frankly, though defense looks promising, we are not very gung-ho about allocating funds into some of them immediately. Maybe I think we are carefully evaluating some of the pre-IPO possibilities in the private space, where I believe that I think the valuation could possibly give you the advantage of unlocking in next 1 or 2 years. So frankly, I think we'll have to wait and see as to where exactly we put our money into.
Okay. And what are you avoiding completely? What Deven bhai will not even touch with a barge pole?
I don't know. I think we haven't done that shortlisting, but I think somewhere in PSU baskets, we feel that I think where we see that visibility is relatively for a shorter period of time, we are not immediately allocating money into them. In fact, I think some of the PSU companies are great companies, but the fact is that I think we don't see the continuity or sustainability of the engine for producing the growth. So that's why probably we believe that I think we may have to little bit go slow into them. But otherwise, some of the commodity companies, of course, I think we believe that I think the time is good for metal companies, time is good for some of the chemical companies. We'll not avoid them, but we'll be very carefully selecting them into the portfolios in coming period.
Okay. Deven bhai, a view on the macro as well as global markets, in particular this, rally in stocks which are linked to the artificial intelligence and this very sharp sell-off that we've seen in the Nasdaq, in particular Bitcoin. How are you interpreting this?
So again, I think it's a big challenge. American companies, Magnificent Nine as we call them as, they have basically scaled up to 24 trillion dollar worth of market cap, which includes likes of Meta to Alphabet to Microsoft to Apple and among others. I think these companies, out of the total market cap of 68-69 trillion dollars, they assume 1/3 market cap, and they have scaled up very high, including Nvidia. I believe that I think those companies are possibly required to sustain the growth rate. Like today, Bloomberg study, if one has to go through, Nvidia is possibly funding their own cash flows to the data centers, basically to buy their GPUs, I think the chips. So in my viewpoint, I think this is where possibly I think one is likely to see some amount of correction in the valuations in those markets. But other than that, I think we are not negative. We remain positive. We remain positive on the prospects and possibilities. More underlying application, I think, in the AI space is something which we are basically looking at very carefully. I think we are positive about the likes of humanoids, I think, coming out of Tesla. After FSD, they brought it into the four-wheeled vehicles, passenger vehicles. We like the proposition wherein I think the entire San Francisco belt is now basically driving on driverless taxis. I think that is again, I think, a new industry which is emerging. So such kind of applications which are coming out of the AI is something which we like to deal with. And I think that's where probably I think we are keeping our eyes on in the global market development. India, of course, catches up, and I think it catches up very fast. So those applications, I think, which demonstrated by some of the Indian companies, we may want to look at them favorably at such point of time.
Deven bhai, let's look at beyond the medium term, maybe in the next 2-3 years. Now, India Stack is something that helped us navigate the pandemic very well and is now the bedrock of all that is good in capital markets. In terms of UPI, in terms of ONDC, and many other such government initiatives, what is the latest that you are tracking?
Well, I think this is the opportunity of this time. I think India has extremely smartly adopted the technology platforms which has been made available to them from the global markets. The infrastructure providers like Amazon Web Services or Microsoft Azure or even Google for that matter. I think we have been basically picking up the entire infrastructure provided by them, and we are now putting significant amount of thrust on the transactions. You rightly mentioned UPI based transactions, I think, which we did as far as the currency value is concerned, the currency rupee trading is concerned, or maybe transaction is concerned. We have ended up saving $7 to $8 billion over there. We are currently in the position where I think ONDC, that is Online Network of Digital Commerce, which is possibly a B2B platform to begin with and B2B2C platform thereafter, I believe, opening up for even the global traders and buyers and sellers. I believe that I think this is one platform which has the possibility of generating $500 to $600 billion worth of kind of rupee equity value in the portfolio. Similarly, CBDC, the central bank digital currency, which has already started trading with about 5 countries and likely to expand the activity, it could also save, I think, the currency what we call, I think, the exchange of currency value, that is de-dollarization as we call it in normal situation, could again, I think, save on an economy of 4.5 trillion. Even if at an average of around 5%, if you are talking about $125 million kind of a saving that we are going to see from this area itself. And I think this entire stake, which is basically driven by the logistic movement under Gati Shakti, is also expected to save around 5 to 6% from the GDP. And so would be the value saved, I think, in the area of composite energy, that is renewable energy, combined with the conventional energy, could possibly result into approximately $1.25 trillion worth of saving for the country as a whole, fast forward next 5 years. So we are extremely bullish about, I think, what UPI did in past, I think is expected to be repeated by other five in coming 5 years. So frankly, I think this is a prospect and possibility that we are seeing at this point of time.
Deven bhai, this India stack story, how do you play it in the market?
Larger companies are the ones I think who have basically shown the path. Reliance is putting across a big time infrastructure, one in form of I think generating the renewable power, applying that power into the green hydrogen, putting that power into data center for computing, and creating the entire value chain proposition starting from originating the manufacturing of the renewable power to producing the renewable power to applying the renewable power. Now, if you see the kind of current capacity which the world is asking for in form of data center related power, I think this is going to be the next big demand going forward in next 10, 20 years for the global economy. Companies like Reliance, companies like Adani Group, I think they are basically putting significantly large amount of thrust. Tata's they do, I guess I think they are still not giving that visibility which Reliance and Adani are giving at this point of time. So in my viewpoint, I think some of the larger groups, because it's a capital intensive business, entire world is catching up on this capital intensity. In my viewpoint, I think this kind of large capital expense when they are incurred, I think they create larger opportunities for the country as a whole. We believe that I think this is a game of big getting bigger, and that is where probably I think you have to clearly focus on some of the larger ones who are creating this kind of a proposition. Smaller companies might take some more little time because they are part of the value chain system, but otherwise these companies are going to show better performance as I see it.
Okay. I think what we'll do is we'll do a separate show on India stack and get hold of Deven bhai, and he will also discuss mid caps and large caps, mid caps and small caps within the India stack segment, which have some of them actually have done phenomenally well, but that's a story of a different day. But for now, Deven bhai, as always, it's such a pleasure to speak to you. I'm looking forward to meeting you in Mumbai. बहुत दिन हो गए आपसे मिले नहीं. And let's hope that we've had terrible 2025 so far. Let's hope this Christmas rally takes us much higher for the calendar year. Have a nice day and have a nice year, sir.
Thank you, Shail. I think the tough days don't last forever, the tough people do. So I think be part of that particular fraternity. And do come out to Mumbai. We'll have good.
Yes. Tough times don't last, tough people do, and Deven bhai is a third generation broker who's done amazingly well in life, so he knows what he's talking about. With that, ladies and gentlemen, we'll call it a day as far as this show is concerned. Remain glued to Business Today Television. Thank you for your time.